Do not listen to what's taking place in the media about the high interest rates taking place. There is a massive opportunity that is happening right as we speak, and you need to be on top of it. And this is the only video that you're going to need to watch to understand the opportunity and how to leverage it and why now is super important. I'm Josh Zavares, investor and realtor with the eXp Realty Brokerage. So amazing if you can help us out and hit the like button, hit the subscribe button, and hit the notification bell to get updates on our newly uploaded content. And if you guys want to know about real estate investing, guess what? We've got a fantastic all-in-one real estate investing course that you guys need to get your hands on. We are working on it right now. Once it's ready for launch, we will let you guys know. And without further ado, guys, let's begin. As we know, the pandemic has impacted many areas of our life, whether it's through health, whether it's changes into how we go about living our lives, but also financially in terms of what happened with the interest rate hikes and in terms of real estate in the market as a whole. The pandemic essentially brought down very low interest rates, which got a lot of people into the market who were buying overvalued real estate that as of right now, they're having a difficult time because of all the interest rate hikes taking place and people paying up to 200% increase of what they were paying before with their mortgage back when they had got the mortgage in 2021 or even 2020. This is for individuals who are not feeling very good right now. But this is an excellent opportunity, like I said already, for investors who are ready for the shift to take advantage and leverage this. I'm going to tell you why. I get it. The high interest rates have definitely made a hinder on a lot of people, whether it's going to be for investors or homeowners. But guess what? There's a lot of individuals who purchased properties over the last 2 to 3 years who were barely able to afford it back when they got the mortgage. And now they're in the position where they definitely have to sell their property. And guess what? The leverage is in your hands as an investor. And why it's such a great time is that now, guess what? These individuals who are in a tough circumstance need to sell their home. And as a buyer, this is fantastic because homes are staying on the market longer, the value has gone down, and now you can add more concessions, and now you don't have to have as much upfront. You don't have to have financing within 3 days. You can essentially wait up to 5 days conditional period, maybe even longer, and even ask for the homeowner to provide either help on the closing side with fees or even help to provide more renovation costs into the property before you purchase it, something that you could have never done over the last 2 years. Think of it this way as supply and demand. The individuals who are now in the hurting position are now the opposite individuals than they were a year ago. You now have people who are able to stop, look around, make the best options, be able to strategically and logically make the right decisions, where over a year ago, you would have people putting everything in, have massive deposits, overpaying for properties, 30, 40, sometimes over $100,000, $200,000 more than what it was listed for, and having homes sell within hours of being on the MLS, something we had never seen as hot in the past. I spoke to many different investors who have been in the game for over 30 years, and they said to us that back in the day, a hot market was putting 5,000 above asking, not 150, not 200,000, as we were seeing the last couple of years. And guess what? In North America, we're seeing a lot of migration taking place. In Canada, especially, we're expecting over 1.5 million people over the next 3 years. That's an average of 500,000 people per year who need housing. And guess what? There's not enough housing available being built at the pace that we're having a lot of people come in. So guess what? That means vacancy rates are getting lower, rental prices are going up, but guess what? Values are dropping. So it's an excellent opportunity as a real estate investor to buy properties at a discount and be able to charge top rents and be able to leverage what's going on in the market, knowing that there's going to be a lot more quality tenants coming here, migrating here. So it's not so much difficulty on the investor side. If anything, it's still more difficult on the tenant side. For 2023, analysts are saying they're expecting inflation as well as GDP to continue to rise for this year. The Bank of Canada has stated that they are not afraid to continue to increase interest rates to level off with inflation. And we're starting to see inflation slowly level off, and we're expected to see a 0.25% increase instead of something higher along 0.75 of an increase, and that's rate increases for loans. Now, as a real estate investor, we need to know that higher interest rates essentially mean that prices are going to drop in value because less people will be able to qualify for the same number of mortgage, and we're going to start noticing, as we already have, that more people are not going to be able to afford the mortgages they had about a year ago, especially if they have a variable loan. And then now they're in a position where they have to sell, and the buyers have all the leverage to shop around and ask for conditions they could never do, like I said, 2 years ago or the last couple of years. And in 2022, we've seen property values decrease over 24%, something that we haven't seen for a very long time. Now, depending on the property type and the region you're investing into, prices and price points are going to, of course, be a lot different in terms of percentages, increases, values, and so on and so forth. So you need to do your research into the markets that you're looking to invest into and make sure your numbers make sense. And you need to have reserves. Like we always say, you need to have reserves in the event that, you have a property that's got a loan on it that continues to rise and it's variable. You need to make sure that you have some sort of reserve funds, at least $10,000 in the event something takes place. Listen to this. In Ontario, February of 2022, properties in Ontario were going for an average of $1,082,000. That is astronomically higher than what we've seen right now, where they're worth on average in Ontario about $800,000. That's a complete reduction of $200,000. Completely mind-blowing. As you know, we are an investor in Canada as well in the US. So guess what? In Detroit, you've got homes that are going for $80,000 that are increasing in value. The down payment you would put on a home in Ontario could essentially pay for almost a full house in Detroit, cash flowing over $900 in USD today. That's fantastic because the full loan of that property worth $800,000 today, that could buy you 10 rental properties in the United States, all cash flowing over $8,000, which means you could essentially leave your job if you had access to those funds to invest in the Section 8 program, living a completely different life you'd have now, being able to go travel and do whatever you want on your time instead of owning a home, example, in Ontario worth $800,000 a day and essentially have to go to work and continue to go through the 9-to-5 grind, going through the rat race, which is not ideal for anyone looking to get out. Now, if you're on the sidelines looking to purchase a home and haven't yet, then here's a couple of things that you need to have in order to position yourself for success. Now, if you're an investor or a buyer, guess what? You need to have a really good credit score to purchase even in today's environment. And it's really important because by having a low credit score, you'll have to have a higher payment that shows that you're not able to go about successfully paying off your loans, and it shows that you're actually higher liability to the bank, where if you have a high credit score, you'll get a lower interest rate because it shows that you're less of a liability. And some tips are, of course, to pay your credit cards every month in full, at least pay the interest on your line of credits. You give the bank an opportunity to make a little bit of money from you, take out a line of credit, pay some interest, and then pay it off. It'll show that you're very responsible and they can trust you. And also too, being able to keep your actualization rate low at 30% or lower, which means you're only using 30% or less, which goes to show you're very responsible when it comes to using debt. Another way in terms of purchasing a property, whether it's rental or any type of property as such, is going to be having a higher down payment. It's going to make it a lot easier for lenders to want to loan you the remaining amount because it's less of a liability. The more they have to put up, it's more of a liability. The less they have to put in, the better it is for them, and even helps your opportunity at potentially having a lower rate. Also, by going about having a higher down payment, you have less of a loan. It'll take you a shorter time frame to go about paying that and essentially making less money for the bank. Also, I highly recommend looking to government-backed loans, whether it's FHA loans in the US or anything where the government is providing you an opportunity to get a loan and providing some sort of credit or some sort of ease to helping you get that through certain qualification requirements needed. I highly recommend you speak to a professional mortgage specialist who is very qualified in their field, who will be able to provide you all the options needed to provide you the great opportunity that you have in this real estate investing opportunity that presents itself in front of us. And with how the market is taking place, a lot more people are leaning towards fixed loans because they know what they're getting today is what they're going to pay. However, anything can change. In 6 months' time, the Bank of Canada could start saying, hey, inflation has gone back to 4%, 5%, away from 11%, and actually go about reducing their rates. So it really depends. If you're going to go with a variable rate, then as you know, as it continues to rise or drops, you're of course going to feel that type of wave, where if it's fixed, you're only going to pay the amount that you're locked into. At the end of the day, you need to know the risks and know what you're comfortable with, what you can and what you can't sustain, and make a decision that makes the most sense. And like I said, speak to a professional who's really good in their field, who can essentially provide you all the information in a manner that gives you everything needed to make the right decision. And remember, with what's taking place in this market, you do not want to be a statistic of someone who sits on the sidelines waiting for things to wait out even further. Because guess what? The individuals who after the 2008 crash happened, who sat on the sidelines, are the ones who probably purchased whether a rental property or invested a ton of money into stocks, in 2022, and they are the ones who lost a lot of their money, whether it's through crypto, stocks, wherever, and they're feeling the hurt right now. Where right now in this phase is a great opportunity that if you invest right now, come in 10 years time, you could have 10, 20 properties, whatever the circumstance is, being able to refinance, multiply, and have cash flow and be able to have multiple streams of income that provides you a wonderful predicament than opposed to being the individual who is always waiting for the rates to drop, who's always waiting for things to increase. At the end of the day, we only have the ability to control now. We don't know what's going to happen tomorrow, 2 weeks, a year, 3 years. We have the ability to control what we can do now. That's what we always recommend. If you're going to invest or buy today. The best opportunity was yesterday. Today is the time, because I don't know what happens tomorrow. We don't know what happens in the near future. For all we know, properties can just skyrocket, starting tomorrow, and then you miss the opportunity. Or they can continue to drop, and maybe you did overpay by purchasing today. At the end of the day, when you purchase, you know that you have something. You have it in your hands versus being the people who speculate and say, well, I'm going to wait until it gets a lot lower interest rates, or I'm going to wait for property prices to increase, and so on and so forth. So don't be that statistic. Don't be that individual who makes the least strategic choices. I hope that video was super helpful, insightful, and gives you an insight as to the opportunity we have in front of us and how you can profit from it. I'm Josh Tavares, investor and realtor with eXp Realty Brokerage. It's so amazing if you can help us out and hit the like button, hit the subscribe button, and hit the notification bell to get updates on our newly uploaded content. And guess what? We have a real estate investing course coming out very shortly. We go through in depth from real estate investing for beginners, renovations, how to go about attracting joint venture partners through social media, everything from bookkeeping, organizing. We're talking about this, probably one of the most complete real estate investing courses you're going to find and have so much value, and it's going to be at a great price. So keep your eyes out for that. It's going to be fantastic. It's going to be a game changer in the real estate investing space, whether you're a Canadian or an American or really anywhere internationally in our eyes. So keep your eyes posted with that. Thank you so much, guys, for watching. Take care.